Hey everyone, my name's Clay Carrington. Thank you so much for joining us for another podcast interview with the Canadian Blockchain Consortium. I'm really excited about today's guest, Arthur Salzer. He is the CEO and CIO of Northland Wealth. And last year, he made a very strong statement that Bitcoin should be considered a new asset class with a place in classic investment portfolios. In 2021, this is exactly what has begun to happen all around the world. He is a lifelong innovator with a bold and strategic vision for the future of Northland Wealth, one of Canada's leading family offices. Arthur is an award-winning CFA with a background in economics. He's been featured in major media outlets like Bloomberg, the Financial Post, and the Washington Times for his prescient views and commentary. He is a strong voice for Bitcoin and the digital future of finance. So Arthur, thank you so much for joining us today to provide your unique industry knowledge about cryptocurrency's rapid adoption by mainstream finance.
Thank you so much. It's a real pleasure.
Awesome. So I'm going to jump right into my first question. So I think it's super interesting that more and more interest in Bitcoin is coming from the world of traditional investment management. So what first sparked your interest in cryptocurrencies?
It's funny. I was at Anthony Scaramucci's Skybridge Alternative Conference back in May of 2017. And obviously now, Anthony's coming out with a Bitcoin fund for Skybridge. But I just come off camera speaking about ESG investing in Canada. And two of the wait staff ran up to me and they said, we have a question for you. Should we put our life savings into Bitcoin? And although I'd heard about it years previously, and I had a couple of next generation family members that we served trying to mine Bitcoin at their parents' house and running up $10,000 electricity bills. Really, the only thing I knew about it in May 2017 was the price was starting to go vertical. It looked and it felt like it was in some form of positive feedback loop, to a point where it was almost like a bubble. And the money managers that I knew that were in Bitcoin were actually trimming positions. And this is after Bitcoin ran from $100 to $2,000. So it was already 20x that cycle. And I said to them, listen, I don't know anything. I haven't researched this at all. But the smart money that I know is trimming, they're reducing positions. So I would be very careful. And the funny part was the market, with FOMO went up another 10 times and we had a peak at almost $20,000 within 6.5 months, which was something that I never expected. But I started to look at it more after that run up and pay quite a lot of attention to it. And I noticed speculators or investors like George Soros started to look at it as an asset class to invest in. And he tends to like assets that go into bubbles or collapse because they're easier to trade for him. And I saw companies like Fidelity create entire subsidiaries like Fidelity Digital to custody and to potentially have their institutional clients and IRAs access Bitcoin. And I said, there's got to be something more to it. So let's start a real deep dive on it. And that really started a 2-year journey where I probably put in 20 to 30 hours a week. I mean, I work 80 hours a week anyhow. So 20 plus hours we're going into learning about Bitcoin as an asset class. It was quite an experience.
That is absolutely incredible. Very few people will actually take that amount of time to learn about something new. I know when I first got in the space, I don't know if I did 20 hours a week, but I got into it kind of through mining, and I was probably spending 6 hours a day after work in my basement, just reading white papers and fiddling with miners. And it was, I loved learning about it, but I know a lot of people, they feel kind of overwhelmed and, there's so much information out there. Where do you start? So that's really interesting. So actually that does lead me to a question. So when you started doing all this research, 20 hours a week, where did you go? Was your first thing okay, go read the Bitcoin standard? Because I know you've had Safety Dean speak before.
Absolutely. So the first thing, of course, you read the white paper and it doesn't quite gel completely the first time. then I started reading the Bitcoin Standard, and 80%, I think the first 80% of the book really was about the history of money and what it's been to various peoples around the world over millennia. And you start to develop a different view of what money is or was or can be. And I think it's a very valid book to start off on the right foot. And it's easy enough nowadays to start doing quick searches, but because of who I am in the industry and where Northland is, it's very easy to call up professionals, asset managers, investors, and say, listen, I want to talk to you. Can you spare me some time? And I started reading a lot of the works from Nick Carter. And, I saw that he was at a VC firm. So I just sent him an email and I said, hey, this is who we are. Northland is. I want to learn what you're doing in this space. What is Castle Island Ventures doing on the VC side? So flew to Boston, arranged meetings at the same time with Fidelity Digital. And I spent some time with Matt Walsh and Nick Carter, and as well as the Fidelity Digital team. And you start to put this mosaic together and what people share their thoughts, what's currently going on and what could be. And it was, attending events like Pantera's, Crypto Investor Summit, where you had the heads of ErisX in there and backed and people like, Nick Szabo, the cypherpunk from the 90s and then the founder of BitGold, hearing what they had to say and how they viewed the world, help put those pieces together. And I was fortunate to meet people like Hunter Horsley and Matt Hugin from Bitwise and spent, better part of an afternoon in San Fran with them, or talking to people like Tour Deemster or Travis Kling from Igitai. It all helps put that picture together. Is this an asset you trade? Is it a store of value? Is it a form of communication? And again, the way I viewed it, I was coming from the investor side, the portfolio management side. Is this an asset class? Is it something that will complement other investments like public equities or real estate or private equity? And how does that work? And there were some good papers from Yale out on that subject, and that helped solidify making Bitcoin as an investment. And we probably dipped our first toe in the water, would have been spring 2019. So, after the bear market, the bottom had happened, and we slowly started to build positions. And as Mark Yusko says, get off zero.
Oh, I love that. Yeah, I definitely, I learned about Bitcoin, I think, early 2017, before it did that massive run up. So it was kind of sitting around that $1,200 mark. And then I watched it go up and I was like, this is incredible. And I was just like, buying every step of the way. And of course, I FOMO'd like everyone else. I was like, well, just keep buying. It's amazing. It's going up. And it crashed back down. I was just like, sweet. And I was like, I'm going to go buy some more. And everyone started looking at me like, you're nuts. Like it just crashed. Yeah. Like it's nuts. I was like, no. But if you look at the historical charts of it, I was like, every time it's had this market run, I was like, it's happening again. No, it's going to take some time. It's going to happen. And people just looked at me like I had lost my ever loving mind. And so this market run, I'm just like, I have my Bitcoin store. It says, I told you so. Because I'm like, I just knew it was going to come back. But yeah, it's so interesting how like those market cycles happen, and people really started paying attention, I think, after that 2017. And now I think people are paying way more attention. So my next question would be, so Bitcoin has like just skyrocketed in price. So now you have guys like Michael Saylor getting into it and Tesla getting into it, putting billions of dollars. It's gone like past 60, I think it's almost hitting like $70,000 Canadian right now. Yeah. So have you been getting like more interest from your high net worth clients on how to participate in this, or are they just really thrilled that they already have exposure to it through your fund?
They were very happy that we made purchases under $10,000 for them. But the original purchases, I mean, some of the meetings that we had with clients, they'd be screaming, like, don't you understand? This is a Ponzi scheme. I've talked to my accountant or some financial advisor, and I'm like, Fidelity's been mining this since 2015. Do you understand? Like, one of the world's largest asset miners, it has been mining Bitcoin. Why would TD Bank put capital into ErisX? Why would ICE, the owners of the New York Stock Exchange, put capital into Backed? Why would the CME have commodity futures to trade? I said, this asset class is becoming institutionalized. If we didn't see the institutionalization, those on-ramps, the plumbing being created to increase the adaptation of Bitcoin and the number of holders or hodlers or investors or speculators or whatever you want to call them and whatever their views are to get into the asset class, without that institutional wave, we wouldn't have made Bitcoin an investment for our families. It would have been something that we might have done in our personal accounts, our PAs. But with that wave coming and a halving happening, so reduced supply output, the 1 and 1 equals 3. And that's why we'd seen prior waves. And a lot of the work we did was how and when to right-size a position, how and when to potentially go to zero. Because when we look at previous cycles, and this is only from an investment standpoint, it's not a philosophical one, Bitcoin tends to fall 70 to 80% in price from those market peaks because there is too much irrational exuberance at the tops. And a 75% decline in the security price, and it's not a security, it's its own asset, but a 75% decline in a price is a 50% decline plus another 50% decline. And that's too hard for most people, most investors to stomach. And it's very difficult if you're a fiduciary and you're claiming to protect a family's wealth for them. So we understood that an asset such as Bitcoin would have to be traded or at least rebalanced greatly in order to mitigate a lot of that volatility risk. However, when we look longer term, when we look on a secular basis, the log charts, the logarithmic charts versus the linear, shows that Bitcoin is still in a secular bull market, that there's lots and lots and lots of room left. So with adaptation, the valuations are really sky's the limit. And I wouldn't be surprised to see at some time this decade, $500,000 valuations or even potentially $1 million valuations. It really is the most interesting asset class I've ever researched in my 30-year career.
That's absolutely incredible. So I know we touched on this a little bit, but I'm interested, just how much education do you do at Northland Wealth about Bitcoin for your clients? Like, I know you brought in gentlemen like Saifedean to talk, but have you noticed that it was almost like every single one of your clients you had to kind of do this education for, or? The most fun really is it isn't so much talking about the price or the potential, but I mean, I work in the securities industry. I mean, Northland is a regulated entity, and that means full KYC. That means lots of forms, lots of documentation. We know everything about the families we serve. We have to, but I can sit down with an 82-year-old family member, a grandmother that we serve, and I say, you're pretty tech savvy, you're smart. Let's have some fun. Let's set up a hot wallet. And I transfer maybe $10 equivalent, over at the time. And she sees how easy it is to download the app, to utilize it on her phone, to receive it. And it's all done within 10 minutes. And then the light bulbs go off. It's like, well, how do I get more of this? How do I send some to my grandkids? They using it, it's a step beyond just an investment. And they start to see the ease of use, because a lot of people have done wires or try to move some amount of money around. They use Western Union, and to be able to get on a phone and do it without a bank being involved,
really is a watershed moment for many people.
It's incredible. Like I go try and send a wire and it's just like, the person you're sending it to, why are you sending it? Like, what is this company about? And it's like, the bank asks you all this information. It's just like, well, like, it's my money. Shouldn't I have the right? Like, it should be an easier step.
No, it's the government's money. It's not yours. It's not mine. That's the problem.
That's exactly it. And they want to know every single thing that you're doing with it, where I can take my Bitcoin, send it to someone anywhere in the world, and it's no one's business that I sent it. We actually had a webinar the other day on sanctions, and I was listening to a gentleman, and he's with a blockchain intelligence group, and their whole goal is trying to kind of like figure out where Bitcoin's going. And they're talking about like, how if you're a company in Canada, you're dealing internationally, you have to be so mindful of like sanctions and all these different things. And I was like, well, how do you actually figure out how you're going to like track this Bitcoin address? I was like, if I have a cold card, I could generate 1,000 different addresses if I felt like it, use a different one for every transaction. How are you going to figure out that was me? And then on top of it, you have technologies. You have like Wasabi wallet, and you can coin join and batch a transaction in your Wasabi wallet and send it anywhere. I was like, how are you going to figure out I did that? They're like, well, that's the thing, we can't. I'm like, I was like, oh, wow. I was like, that's interesting. Like you could send your money anywhere anonymously. So it's like, how are you going to?
It's sovereign rights of the individual. That's really what it is. Yeah. There was a period back, would have been in 2019, September 2019, and we had to fund a private equity investment for a family through their family trust, to a European investment firm. And the valuation of the wire was getting close to $1 million. And 2 days previously, the overnight rates, the repo market backed up and basically seized. So we send this wire out, and a French bank stops the wire, and we get an email. Well, we want some more information about the trust because of know your client. And we said, absolutely. Northland's, we follow FACTA rules. We're fully regulated. We report on all of this. Here's all the information about the trust. Please move the wire on. Well, that's not quite what we wanted, but we gave you everything you asked for. And they froze the wire. They wouldn't send the money forward, nor would they return the money to the trust. And how long do you think they held the wire for?
3 months.
30 days. And every email I sent to them, when are you going to move the money? The line at the bottom was, I could have done this for $7.95 in 10 minutes or less with Bitcoin. You guys are in trouble. This doesn't work. This is unconscionable that you are holding these clients' monies and not letting them go where they want to when it's legal and fully disclosed. And a point was made. And I actually took that and I wrote it as an article in the Financial Post magazine, because I was so outraged because they need working capital, because a bank needs working capital, because it's over leveraged, that it's going to hold your money for whatever period it thinks it's the right amount of time. It's just silly.
Yeah, so they can make money off of your money
so that they're technically not insolvent, right? If they hold your money, that's the point.
Yeah, well, I really love listening to you talk about that. I've been hearing so many different podcasts lately on things that are kind of similar. It's like if you're holding your money and say like, or your Bitcoin, say in like a bank in New York, and they're giving you unreasonable rates, it's like you can just move it for $10, $12 within, less than an hour. And now it's confirmed to a bank in Singapore, and they're going to give you more reasonable rates. So like it opens up the entire world. You can send it anywhere. It costs next to nothing to send it. You don't have to ask anyone's permission to. It's just like, well, you're not working for me. Go somewhere else. And you let the free market kind of decide where they want to, put their funds. Personally, I'm more of like not your keys, not your coin. Don't put it anywhere, but keep it for yourself. But
the interest rate isn't high enough given the potential loss of your assets. I don't think. I understand Bitcoin lending, but I'm not sold on it yet, given you're giving away your keys. So it's maybe at a mature point in the cycle, maybe 10 years from now, 20 years from now, when if or when Bitcoin is a multi-million-dollar valuation per coin, and stability drops to the volatility drops to almost zero. then yeah, I think people will start seriously looking at interest on it and deposit rates. But till then, if you have a price move of 5% in a day, who cares if you get 8 points of interest? It just doesn't jive. But to each their own. It's a free market.
Fair. But I am curious, have you had any of your clients come to you and like want to just buy it for themselves, or do they purchase or like invest more in Northland Wealth to get the exposure to the Bitcoin through you?
Again, we try to explain to them there's a difference between Bitcoin as an asset wrapped in a security, wrapped in a closed-end fund, or wrapped in an exchange-traded fund, versus the actual bare investment itself. And for families that want to control and have their own sovereign wealth, then there are a couple of high quality Canadian exchanges that we say you should talk to and look at. We don't get paid to refer them there. And then we say you should probably look at a multi-sig solution. There's obviously there's firms like Casa Keys, which is a Castle Island investment. And I think multi-sigs are probably the right way to go, with a little bit of help for the non-cypherpunks. The user experience, the UX is still getting better for key management. It's not perfect yet. I think it still has a way to go, but having someone there to help you control one key, but not enough to move your money and give you guidance, I think is probably the way to go. We don't custody client assets. We can't touch them. But we do recommend families that are inquisitive to learn more about proper key storage and to do it in a responsible fashion for their family.
That's fantastic. So I'm curious, so Northland Wealth has become pretty innovative on views when it comes to Bitcoin as an investment vehicle. And I was reading an article on your website at northlandwealth.com that you believe that 6% allocation is a big benefit to investment portfolios. So I'm kind of curious, why is 6 the magic number?
I think it's probably based on the Yale research report that came out in 2018, talking about the highest rate of return relative to the increased risk in a portfolio. It was amazing though, that the studies that I saw, that even a 1% allocation rebalanced, and that's not selling it off during the large market drawdowns that we see every 4 years, nor hodling all the way up to the peaks, but just simply a rebalancing schedule of every month or every quarter, plus or minus 1%, added 2% a year to total rates of return, and the volatility of a balanced portfolio, a 60-40 balanced portfolio, didn't increase. And if you were looking to really increase alpha, and you could tolerate slightly more volatility, 6%, 6.5% was probably the right number. And based on the work that we did, and maybe being a little more active than not, we're trying to ride the cycle as much as possible. So we typically took allocations of between 2.5% and 10%, which is way off zero. And we rebalance around a 50% target. So if we bought 10%, which is a huge position relative to a family's overall portfolio, if it ran to 15, we'd bring it back to 10. Similarly, if there was a period of drawdown and it drew down 50, we would add and bring it back up. But I think you only want to do that sort of late stage after the halving, where the conditions are in your favor. Realistically, if you were going to hold the entire cycle, you'd want slightly lower allocations, because again, a 7% decline on a 10% position will materially affect people's net worth and their confidence in investing in Bitcoin as an asset.
Yeah, I definitely understand that. I was, interestingly enough, on my drive back, I was driving from Edmonton back to Calgary today, and I was listening to the new podcast that Safe Dean did with Michael Salzer, and he had that kind of the same point. It was like, well, with the market cycle, we can see up to an 80% retracement. And it was interesting to hear Michael's view on that, where he's saying that he thinks that those days are gone, mainly due to the fact that individual players that are like, he said, 10,000 people in the world could possibly put $1 billion at any given time onto the network, and maybe 2,000 of those could afford to do like 10 billion at a time. And just, I think it was Monday this week, somebody came in with $5.5 billion within like a transaction, about 11,500 Bitcoin. So it's like, and when those companies start to announce it, he thinks that is going to be kind of like that tipping point where it's like, you might see a 20%, right? But you're not going to see the levels.
And then you rebalance, right? But I think we were looking for a situation where you have 100% return in like 2 weeks or less. That in any investment, any asset shows excessive speculation, and being around and seeing market ebbs and flows over 30 years, that's really a sign. If that doesn't occur, then again, you rebalance back to your target weight and you keep riding the wave. So it's about some common sense there too. And you have to be flexible enough to, when the facts change, you change your conclusion. But one of the worries that we had initially, because when you listen to Dan Moorhead, and we spent some time with him, it's funny, it would have been 2019. I spent about an hour and a half with Dan Moorhead at Pantera, and as well as some of the research team from Northland. And we asked him, and he's there. I mean, he's got the most successful investment fund in the world. This guy's a former, head of trading for Julian Robertson, Tiger Cub as well. And he said he only had 2 meetings, which basically meant Anthony Scaramucci and us in Northland. That was it. Nobody talked to him. Which is incredible given the background of somebody who in the 90s went over to Russia and arbitraged the preferred share market versus the common stock market. Like the guy's very, very smart. So we understood his viewpoint about having Bitcoin's asymmetric return profile, that there's almost unlimited upside and moderate amounts of downside. You can just say, yeah, it doesn't work, it goes to zero, but look how far it can go if it does. And that made a lot of sense. But in the Western world, we have capital gains taxes. In the US, there's short-term capital gains rates versus longer-term ones. And in Canada, capital gains is all the same. Although I think it's probably going to go up if the Liberals get elected again. They'll push the rates up on capital gains. But too many people don't trim, don't rebalance, don't try to manage risk because they're always worried about the after-tax consequences. So the first place that we go to invest for families in Bitcoin, and again, it's viewing it as a financial investment, not a bearer investment, but to do that in a tax-free savings account. It didn't make sense in RSPs because families will lose 50 cents on the dollar when it's withdrawn. But to put it in a TSFA, and again, it's an asset class. It's not like a small cap stock or something that you've got material inside information on. You can buy it, you can hold it through the cycle. And if you get 3, 4, 5, 10x, you can turn a $70,000 TSFA into $1 million pretty quickly. And for our families, I mean, we basically put the limits at 70 grand. And now all these families are sitting on with $400,000+ tax-free savings accounts. And if you do that across the family with husband, wife, children, aunts, and uncles, boom, there's $1 million with no taxes on it. That's the way to increase wealth. So, and again, if we have to sell it, if we do see a point where the position gets too large or the price does go vertical, we can reduce it, we can right size it without worrying about taxable implications. So it's a much easier decision to make.
Oh, that's fantastic. So I'm really curious. So we're all hearing about all these like major firms that are getting into it, and this kind of seems like that tipping point where we're starting to get a more solid ground for like mainstream adoption of Bitcoin. like, so where do you see this trend going in the future? Like, if this is kind of like the precipice point where we're starting to kind of see it in the trajectory, do you have any idea, any predictions or thoughts on where you see it going?
Well, I did sit down for a couple of hours with head of blockchain at BlackRock in New York City a year ago, and we were discussing, what the potential was, and he said, BlackRock's never going to be the first mover in this. We're not going to apply for a BTC ETF. We're not going to be the first mover out the door, but we might be the second, we might be the third. And I said, so what do you think the real demand is? And, without seeing exact numbers, probably something the size of GLD, right? So that's a lot of increased demand into still what's a very tiny asset class. I mean, $1 trillion of market cap is less than half of Apple. It's less than half of Amazon. It's slightly more than Tesla. And yet, when you can see what it can do, and it can replace, not just stocks, but entire asset classes, like, is it worth what gold is? Is it worth what real estate is? Or is it worth what a lot of the world's paper currency is? And that's the potential. It really is the sky's the limit. And it's funny, I was on a call 2 weeks ago, and this was before the SpaceX announcement. And he said, well, is there anything you want to talk about? And I said, yeah, let's talk about Elon Musk. Let's talk about what he's doing. And I haven't heard it, and everybody thinks he's trying to save the world, but I think he's worried more about saving the world in an extraterrestrial fashion. It's, how do you get the ship to get out of the Earth, off the Earth to another planetoid? How do you then move around? Well, you don't have a refining industry. You don't have petroleum. So you're not going to have petrochemicals. So obviously the most, obvious place to go to would be solar, would be batteries. And I think Tesla is just a testing vehicle for what he wants to do once we leave the Earth. And we're not going to build roads, so we're going to have to build tunnels. So the Boring Company makes a lot of sense. But I said it wouldn't make a lot of sense to pack up, US dollars or Chinese renminbi or the euro on a ship and try to send it to Mars. And gold's way, way too heavy. So, given that we've got companies like Blockstream where we can use satellite, I think the first reserve currency on Mars is going to be Bitcoin. And within 4 days, the Tesla announcement comes out that he bought $1.5 billion. So I think that's where it's going to go. And you might see the Bitcoin being used as the currency of Mars before it's the official currency of Earth. But that's just a guess.
All right. Well, people definitely heard that one here first. I love that. Definitely be interested to see how they're going to colonize Mars. I'd be a little worried about getting out there right now. Not a whole lot of the infrastructure things that I like, but I like the idea that Bitcoin will be the currency of Mars or any other planet for that sense.
Well, you just beam it there, right? I mean, it's, and then Adam Back's back in the picture with Blockstream. So it seems to make sense. Because it's not good. And I know people say it's like, Dogecoin or Dogcoin. I think it's Dog-E-Coin, right? Like, Dog-E-Coin. I don't think that, maybe it'll be there to flip for the first, intergalactic competition or something on Mars, but I don't think it'll be a lot more than that.
Oh my gosh. I remember there was a gentleman that I peripherally knew just based on being in the blockchain consortium. And one night I just got this random Telegram message, and he's just like, I need 230 million Doge. And it's like, do you have any? I'm like, no. And if I did, he's just like, I'm sending it on, I guess there's like a SpaceX project where they're like putting stuff in a capsule and sending it to Mars, and he wanted to send it there. And it was just like, at first, I literally thought the man was just like, had like kind of lost something. I didn't really know him very well. I was just like, you want to send like this much money in Doge to Mars? Why? He's like, well, I have to pay. He wanted to pay in Doge to get his little capsule also onto the spaceship. I was like, wow, that like people who love Doge, like they take it extra. Like,
actually,
of Doggy coin.
I actually play World of Tanks, and one of the bonus camos they kicked out a few years ago was Dogecoin camouflage. So it's like the little dogs on my tank. It's funny to look at.
Awesome. Okay, so my final question for you today, there's this new trend happening on Twitter, and I know you're on Twitter. So what do you think? Are you going to put laser eyes on till Bitcoin gets to 100K? You're going to follow with that trend, or? I
did that when I was 7 years old, when I dressed as a Jawa for Halloween. I've been there, done that.
Not going for it this time?
Probably not, but it's cool. Maybe.
I thought it was hilarious. I was looking on Twitter and I was like, okay, like Michael Saylor's done it, Safety's, like all these major people in Bitcoin have all done it. The only one I hadn't seen yet was like Jimmy Song, and I'm like, like I haven't done it, but I'm like, yeah,
Jimmy's cool. That's how we met the first time, right? I went to my only Bitcoin meetup during the Calgary Stampede a couple of years ago, and Francis is there, and Dave and Jimmy and yourself, and I mean that helped position how the public can think of Bitcoin. And a lot of the work I did was reading a book from about 100 years ago about how the Crusades, the Crusades during the Middle Ages caused Europe's first depression. And you had early adopters, trying to go and save the Holy Land. And people ridiculed them and laughed, and more people left, and more people left, and more people left. And during that process, you would have to sell your farm, sell your grain, sell your livestock to leave, because you were leaving for a decade. And it got to a point where a large percentage of the population adapted that mindset and went. So that group mindset was an important piece to see what the potential future could be, that it was more than just some pet rock or Beanie Baby, right? This is ground changing. So it was a good thing to see. I felt I'm not super religious, but I felt like I was back in church again when I was an early teenager. There was that belief system that was there. So
it's strong. It is a strong belief system, like the Church of Bitcoiners, maximalists specifically. You preach on a daily basis.
That's it.
Well, you are now a part of that, aren't you? Are you full-on maximalist, or are you also into some altcoins?
Based on the research I did, something like Ethereum seems to be more like a venture capital play. It's a tech play. The rules can change. It can provide value as a service. Maybe you can make money off of it, but I don't view it as a store of value. And when I start looking at the other coins, the ICOs, a lot of them at best seem to be loyalty points programs. And I certainly wouldn't give Air Canada money and buy points or try to trade them and expect them to go up in value, given that they can change their terms at any time. And in some cases, a lot of crypto is a scam. There was one where a client had put $500,000 into that they were introduced at a local investment event. And I said, let me do some due diligence on this. And I hounded the firm, and I won't say them publicly, but I finally got to talk to one of the partners that was trying to create this coin. And I said, aren't you worried that the SEC is going to deem your ICO as a security? And they said, well, no, it's a utility token. And a couple of lawyers said that that's not the case. And I'm like, well, I mean, have you seen what the SEC's done? And they took out Telegram. I said, they took out Telegram last month and they destroyed them. I said, you guys are in the wrong place. And I said, on top of it, I said, I signed an NDA. I said, who are the other investors? Well, we've got an NDA signed. We can't tell you who they are. And I'm like, you guys are so full of it. It's unreal. How can you not disclose, given that I've signed the NDA? Because I can't tell anybody. And they refused to tell me who the other investors were. So I dug in and I took a look, and basically what these guys was a scammy little offshore hedge fund. And they were telling everybody that their new coin would become the global currency of the world. And that because they were going to put money in their hedge fund, it was backed by real assets as opposed to Bitcoin, which is based on, proof of work and electricity. And it's actually a lot more real than what they were trying to do. But I was just, I was so put off. And I think there's just case after case after case of this. And on top of it, their coin offered long distance calling, and would also allow you to get group discounts and as well as collect loyalty points through MasterCard. And I contacted Amazon, who they said they worked with in Starbucks and MasterCard, and they never heard of them. It was just all a scam. But it's just that there's too many of these guys out there. And unfortunately, it paints a very bad brush to something like Bitcoin, where Satoshi created it, whether Satoshi is a person, male, female, group of individuals, but it was created and Satoshi walked and left. Everything else, somebody wants to have their finger in it. They want control. And basically that means it's a company. So those are very different animals than Bitcoin.
It is. Actually, one of my first forays into this space, I had actually seen my mother post something on Facebook, and she's like, well, if you want to buy Bitcoin, let me know. And I was like, what are you into now, Mom? Yeah. It's like, oh, well, this gentleman came over and he was teaching me all about Bitcoin. And so I came over and I listened to the guy's pitch, and he's like, okay, well, you buy this Bitcoin, you see, and it's like the wild, wild west of money, and you don't have to worry about taxes and all these other kind of things. Then you take this Bitcoin and you put into this USI tech. So you're not putting all your chickens in one basket. And then what you do is you go and get a bunch of other people into USI tech and you make all this money off of it. And I was just sitting there looking at my mother. I was like, Mom, would you just let me do some due diligence? Let me get some research. Let me understand what Bitcoin is. And it's been about 4 years, kind of like from that point. And luckily I was able to get my mother's money out before USI Tech collapsed. And I was just like, I started just education. I was like, okay, people are getting scammed. We're actually building a course right now that we're going to be launching for free on CBC. And it's all about how you identify these things, because cloud mining is a scam. The ones that come in and say, oh, I'm a Forex trader, I'll triple 300 times your money using my amazing bots, it's just like, that's a scam, right? And there's probably at least 8 that we've been able to identify that people don't recognize could be a scam, because they're using language that the regular retail investor isn't used to, and they just think, oh, get rich quick, as opposed to understanding it's like, it actually takes a lot of stomach to make money in this space, because when you got to buy it, and then you have to be willing to hold your Bitcoin for an extended amount of time to actually see those gains truly actualized. It's not like trading's not as easy as people like to think it is.
No, absolutely not. I mean, there's great technology in this space that's coming out, but again, I view it more as in the venture capital side of an investment portfolio, not as a digital asset, not as a real asset or as a store of value. So it's a different thing, which means different underwriting, different due diligence, and you need different expertise. There are some really good, small hedge funds that trade in this space. And that's a way to approach it. But again, then you're approaching them more like financial assets and trying to create alpha off of market dislocations, as opposed to buying something that's a store of value. So it's it's difficult to differentiate between the two for most people, I think. And for most, it's better to, I'd say, stay with Bitcoin. Yes. There's a reason, shitcoins are called shitcoins.
I love that one. There was actually a senator in the States was like, okay, there are Bitcoins and then there are shitcoins. And it's just like, yes, you now understand. Everything else is a shitcoin.
Yeah. But will securities be tokenized in the next decade to change trading, or to be able to buy pieces of a stock? I mean, like Abra, until they got stopped by the SEC, we're coming up with some pretty neat technology that if you wanted to invest in traditional assets, traditional financial market assets, that there were ways to do it, presuming you don't have a lot of capital. And I thought that was interesting. So there's a lot going on in the space, but I think there's crypto and then there's Bitcoin. It's just very different.
It really is. Well, I want to thank you so much for joining me. This was a fantastic podcast with you today. I would love to have you back in a little bit. Bitcoin does some crazy things. Would love to get your future insights on it.
Thank you so very much. It's a real pleasure.
Thank you.